What's going on, guys? Bexio, and today we are going to look at Blockfi, seeing if they actually are in trouble like Voyager was, and we did a video on that. But now it seems like Blockfi might be finding the same fate that Voyager did, as they are trying to get a bailout from FTX, and now a lot of things seemingly not going their way, and a big hole in their balance sheet. A little bit questionable whether or not they're telling the absolute truth because of something that's in their thread that we're going to cover from the CEO. But we can see right here, basically right here, saying FTX extends the $400 million credit line to BlockFi with an option to buy the entire company up to a price of $240 million. That is absolutely crazy. $240 million. BlockFi was valued at $5 billion just about in a year ago. So in under a year, they have gone from $5 billion down to 240 million. And this is the thread out of the CEO trying to say he's excited to share an update on their previous term sheet with FTX and how we've broadened the scope of the initial deal for the benefit of all key BlockFi stakeholders. And then this big thread starting saying we signed a definitive agreement subject to shareholder approval with FTX for a $400 million revolving line of credit, which is subordinate to all client funds, and an option to acquire BlockFi at a variable price of up to $240 million. Then goes on to say this, together with potential consideration, represents total value of up to $680 million. We have not drawn on this credit facility to date and have continued to operate all our products and services normally. In fact, we raised interest rates effective today. So first question, how do they raise interest rates? That doesn't make too much sense in this crypto crash where crypto companies are collapsing left and right. People are insolvent. People have lost basically all of their clients' funds. Voyager is basically going down, and there's a lot more things going on, and they're raising interest rates. And we'll cover it later in the kind of thread here, but the amount of money that they say they've lost due to like 3AC and getting an option for $400 million revolving line of credit doesn't really add up. So see if we can find it right here. So what events led up to this? Right here, crypto market volatility, particularly market events related to Celsius and 3AC. So I didn't even know they had exposure to Celsius. That's kind of news. So already not good. They're involved in two crypto collapsed funds and crypto companies. Not a good look. Both had a negative impact on BlockFi. The Celsius news on June 12th started an uptick in client withdrawals from BlockFi's platform, despite us having no exposure to them. Okay, so I guess they had no exposure, but if they had an uptick in withdrawals, it shouldn't be a problem. If they took the proper risk management that they keep talking about and harping on, it shouldn't be a problem for them. They should actually be able to do this pretty easily. And then their exposure to 3AC, right here in the same week, 3AC news spread further fear into the market. Well, we were the ones to first fully accelerate over collateralized loans, as well as liquidate and hedge all collateral. We did experience $80 million in losses, which is a fraction of losses reported by others. First kind of big problem. Why are you comparing yourself to others? No one cares about other people, care about your company. So you can say you lost that money and how you're going to go about recovering it. But if you only lost $80 million in the 3AC fund collapse, then why do you need a $400 million revolving line of credit and to give them an option to buy the company for $240 million, which is like 90% down from the $5 billion valuation you had? Doesn't make a lot of sense why they would go down this route if they only had $80 million in losses from 3AC. So either they're not being extremely truthful with like losses from other places, or maybe this whole 3AC thing in general, because originally the original thing was that they had no exposure to 3AC. They got their loans back and liquidated them before any of this happened. Now they're saying that they had exposure, but it was only $80 million, guys. Don't worry. So they've already been not very truthful. And what we're seeing is just over and over kind of, originally it was we didn't have any exposure. Now it's we only lost 80 million, to what is the thing that they're hiding? What is it? What are they hiding? How insolvent are they if they need FTX to reach out with $400 million and give them the option to buy their entire company for basically like 99% off? They go on to say this represents the full extent of the impact of BlockFi from 3AC. We have no further exposure and limited the losses we did experience will be absorbed by BlockFi with no impact to client funds. Again, why do you need the credit line then? Why do you need the bailout? You should be fine as your own company. But obviously there's something that's hiding. It just seems like something is going on where they're not telling the exact truth. Where they might be telling the truth about 3AC, but something else in the background, if they took something on and had major exposure that they aren't really telling the truth about. Don't really want to uh, see, if that comes to fruition and they go under. These are the same kind of warning signs Voyager showed when Voyager was going under, and now we're seeing Blockfi show it. So I personally have nothing on these exchanges. Not one sat is on these type of platforms or on any exchange. All in cold storage. You should definitely be all in cold storage. Don't even risk it. Custody yourself. Now is not the time to try and find yield. It's not the bull market anymore. And again, they're doing the same thing Voyager did. Our 3AC lawsuit will be part of a 3AC ongoing bankruptcy case. So more info will surely come out of those cases. Proceed. They lost the money. The money's gone. You're not getting this money back. Sorry to break it to you, to anybody involved, but the money is gone. They blew it. They tried to leverage trade. They lost a bunch of money, then tried to leverage revenge trade, and they lost even more money. They lost $18 billion. The fund is insolvent. Maybe you'll get $10 from them, but going on this saying we're going after our funds, it's good for everyone to say that, but in reality, they're not going to get any money back. And this tweet might be the smoking gun, because originally this is what they kind of said with 3AC is they had no exposure to it. So they say, as a reminder, our risk framework combines counterparty credit analysis, collateral haircuts, blah blah blah, portfolio limits based on stress trading, and we have 0 client funds in DeFi protocol. This is what they said with 3AC. They said they had 0 exposure to 3AC. They liquidated them before any of this happened, and now they're coming back with a $400 million line of credit, a bailout from FTX, and saying, well, we did actually have exposure to 3AC, but it was only $80 million. Like, that's not a lot of money. So hopefully we don't have to see this fund go under. I like Blockfi as a company. I like the people that are invested in it and backing it. So we don't want to see it go under, but it just seems like maybe there's something they're hiding, that they've lost a lot more money than what kind of meets the eye here. Why would you give FTX an option to buy the entire company for 90% off if you don't have problems? And they say for our clients, nothing changes, all this stuff. But there is a big thing that does change is if you're not grandfathered into BlockFi's interest program, then you don't get it. So maybe that helps them where they don't have a bunch more funds coming in gaining interest because the SEC locking them out. Maybe that'll be their saving grace and them kind of cutting rates before other people. Again, I don't want to see Blockfi go under. I like Blockfi, but it's just not looking good. It just feels like something is being hidden, and I don't like that. It just seems like the way they're talking about DeFi is the way they talk about 3AC, and we ended up seeing they actually reversed on that. They did lose money to 3AC, so I feel like we're gonna get an announcement here saying they did actually lose money to a DeFi project, and then just kind of ends it off saying we're incredibly proud what this transaction represents for BlockFi, our clients, and for the crypto ecosystem as a whole. Stay tuned for more to come. Does seem that hopefully they're good. I don't want to see BlockFi go under. I didn't want to see Voyager go under, but the warning signs are there. The problems are there. Don't get caught holding the bag. Just get your money. It's not worth it. Even if they don't go under, the risk is just not worth it. Put it in cold storage. Make sure you own your own money. But this guy at the end here talking about brings up the good point, saying this doesn't add up. If you're not insolvent, why would you need $400 million credit line? Exactly what I'm saying. Why do you need $400 million if you only lost 80 million? You're saying it's not a big deal. Kind of a big deal. And then also, why would you consider selling at a tenth of your last round's valuation, down 90%? You gotta have problems. There's gotta be problems. There's gotta be things not being brought up now. But hopefully Blockfi makes it out. Hopefully Blockfi does great things and we don't have to see Blockfi go under. But if we do end up seeing it go under, I think the warning signs are there. Just take your coins into cold storage and forget about it. Make sure that you own your money and not another company that goes through bankruptcy. You don't want to be caught holding the bag. But that's going to do it for this video, guys. As always, don't forget to smash the like button and subscribe. We're on the road to 1,000 subscribers. I'll see you guys in my next.